Let's start this segment with Nigeria's central bank. Its Monetary Policy Committee has decided to essentially leave rates as they were, at 14%, after it ended its meeting today. The governor of the Central Bank of Nigeria, Godwin Emefiele, says that the central bank is determined to see a convergence of rates, especially between the official market and the parallel FX market.
We've seen the rates now converging, and we are strongly optimistic, very, very optimistic that the rates will converge further. In terms of sustainability, I think it's important for us to say that reserves at this time still trending upwards to almost close to $31 billion as I speak with you. And the fact that we have done this consistently for 4 to 5 weeks should tell everybody, or those who doubt the strength of central bank to sustain this policy, for me to say that they are taking a risk and they will lose in this bid to want to place a wrong bet on the direction that we are going. The direction is that there is a determination to see to the convergence of those rates. And with what we have seen so far, we are very optimistic that those rates will converge.
Right, and so the governor is pretty confident that those rates will eventually converge. The market, however, at the moment thinks otherwise. Let's take a little deep into the details of what exactly is going on up north in Nigeria. Deji Badmus joins us now live from Lagos. Deji, the governor arguing that those who are betting that the naira will fall are, to use his words, on the wrong side of the bet. But let's be realistic here. Nigeria can't rely just on the rising price of crude oil to bail it out of this particular foreign currency policy, can it?
Well, Rama, let's face it. I mean, from the way the central bank governor sounded, I mean, it's very clear that he was actually referring to speculators. This central bank and the central bank governor has always maintained that well, the value of the naira we see in, the parallel market is actually not the true value of the naira. That the reason why we've had a weakening of the naira has been as a result of the activities of speculators. And he was basically referring to speculators there, those who were hedging their bets now on the weakening of the naira. And so it's one of the reasons why the central bank has said it will continue to intervene. And to be candid, talking about a free float, I don't think we're going to see that from this central bank. This central bank governor has consistently maintained that it was never going to adopt a free float, that what we're going to get is a managed float, what we're saying now. And of course, as you heard from him, this intervention will continue for a very long time. And of course, he made reference to the foreign reserve of the country, saying it is getting up to $31 billion now. Of course, you're quite right. Are they able to do this for a very long time? We do not know. But for now, the central bank continues to maintain that it will continue to intervene until these speculators are brought to their knees and until a proper convergence now between the black market and the interbank official market rate is achieved.
Indeed. Of course, the market will still firmly disagree with that. But let's focus on what the MPC discussed a little earlier today. In holding rates where they are, they clearly believe that now is not the time to tighten rates, as it were. So what's their prognosis of the health of the Nigerian economy? And specifically, where do they expect inflation to end up?
Well, they didn't say exactly where they expect inflation to end up, but the general impression here is that inflation will definitely come down, that we're going to see probably by the end of this year, by December this year, we might see inflation coming down to as low as 15%, and that by next year, we might see a situation where the country will begin to think about a single-digit inflation. And then you also have to look at the economic growth and recovery plan that the government launched. The government expects that by 2019, or between 2018 and 2019, that inflation will definitely come down to a single digit. Now, in terms of what the MPC feels about the macroeconomic environment. It says, well, it's still somewhat volatile, and that the reason why it decided to retain rates as they are now is just because of the volatility you still have in the macroeconomic environment. Inflation is not as down as it expects it to, and so its argument is that, you know, cutting rates now will definitely not help the inflation situation, and that it will also affect the real interest rate in the country. And most importantly, the committee says it will definitely not be helpful at all to its foreign exchange policy if it decides to bring down rates at this moment. And so that's why it chose to retain rates, you know, the way they are. Quite interestingly, Rama, as a matter of fact, one of the MPC members actually voted to raise rates, you know.
Indeed. We'll leave it there for the time being. Thank you for the update. That's Deji Badmus, of course, live in Lagos with a quick run through, of course, the monetary policy decision from the MPC.